So as you make it to the fork in the road at the 40s, now you come to the 50s, and this is kind of the area where it's sort of celebration or panic. Can I actually see the landing strip? Am I moving in the direction that I want to be moving, and I have a clear vision for what the future looks like? Or do I wake up one day and say, uh-oh, what have I done, and what am I going to do next?
Yeah, I do think that this is, there's a reason the government gives us catch-up contributions. When the year you turn 50, you get to save and invest more. As I think they go, whoa, that landing the airplane or that looking down the road, what used to feel like I had forever is right over the horizon now. So this is definitely hone in that there's some planning opportunities. Don't let this decade, because you are at the moment where I want this to be a celebration. I'm hoping that you're not, because I think a lot of us financial mutants, you're so good at saving and investing that you're thinking about, well, I can't wait to do this when I'm in my 60s or when I retire in my late 50s. Make sure you're using this time to also, now that you've worked so hard in your 20s, 30s, and 40s, let's start building some memories. Let's start doing some fun stuff. This is a decade of celebration if you've done it right.
But there's a difference in building memories and doing it the wrong way. Because one of the very first things you can think about when it comes to cash flow and spending in your 50s is economic outpatient care for adult children. There's a difference in building memories when you have the resources and ability to do that versus subsidizing your children's lifestyle to your detriment. We know from the Millionaire Next Door that one of the attributes of millionaires is that they have self-sufficient children and they do not supply economic outpatient care to them. So make sure you're doing an assessment. If your kids are at the age where it's time for them to fly the nest, maybe you need to kind of give them that last little shove to actually get them out of the nest so it's not causing you to have to stay in the workforce longer than you need to.
I think that, look, you love your kids, but you are trying to create independence, not them to become dependent upon your gifts, your generosity. And that's the tendency, especially if you have multiple children and if one's doing well or two of them doing well and you have one that's kind of struggling a little bit, there's a lot of us emotionally want to go just fill in the gaps, but a lot of the research, I mean, going all the way Millionaire Next Door, that actually doesn't build the independence. Right. So just be careful. Add some scarcity. I mean, a lot of you, if you are, even in your 50s, I mean, I'm in my 50s and I still have children in the house. Make sure you're not giving them everything, but add some scarcity to their life so that you can create good, productive adult humans.
I love that you said the word independence 3 times as you were saying that, because one of the other things that hopefully is beginning to happen for you in the 50s is now you're beginning to experience debt freedom. There's no longer credit card debt or auto loans, and maybe even no more mortgage anymore. You don't owe anybody anything. And when you are completely debt-free, that's a really good indicator, really good sign that you are likely getting close to the true financial independence point.
Yeah, this is the decade where you're going to kind of start evaluating, hey, what if I couldn't take care of myself? So long-term care insurance is important, the disability type insurance, and also life insurance might be evolving because if you have saved well and you've built up a pot of money, take the measurement on this. I always say when somebody says, should I cancel my life insurance policy? I'm like, whoa, slow down. I can't tell you that. We have to go do some analysis to make sure, but it could be. And we've seen cases where this is the decade where maybe you're not renewing some of those term policies because you have reached the stage where maybe you are self-insuring more of your needs.
I love it. And one of the things that at this decade is so important from an investing standpoint is now you need to review your retirement plan. Are all the things that I thought I was going to be able to do, are they actually going to come to fruition? We have a tool that can help you do that. If you've not done this, go to learn.moneyguy.com and you can download our Know Your Number course, which basically will tell you if I want to live this level of lifestyle and I want to make these assumptions, what is the number that I will need in order to do that? And how close am I to that number? Or what decisions do I need to make between today and that time to be able to achieve that number? You want to make sure you do this assessment so that you can actually land this plane. As you begin to transition in this next stage of life, you want to make sure you're set up and prepared to transition well.
Well, what I like is we've tried to build into this is that, because I think a lot of 50-somethings are probably saying, do I need to still be investing this aggressively? Or can I kind of back off? Do I need to be saving this much money or can I back off? And that's what if I want to retire earlier than what I originally started, or maybe I want to keep working. Does that mean I can change how much I'm putting in? we try to give you all those scenarios because I think these are the questioning things. But a lot of you are going to get in there, even when you do a tool like this, and you're going to say, yeah, but I need to risk stress. I need to stress test this thing because I know I've only going to get one retirement. I need to find somebody who knows what the blind spots are, who's done hundreds of retirements. And this is why you might want to consider taking the relationship to the next level as well. The abundance cycle does have a graduation point.
I love it. And one of the things that'll happen as you begin to think about this, you have to also think about, okay, I need to even look at how risk comes into my investing strategy. Is my diversification right? Is my asset location right? Does it match the stage of life that I'm moving into? If I'm going to think about moving from being an accumulator to now a decumulator or a capital preserver, how does that change? Well, a lot of those answers can be best answered by a professional if you aren't familiar making those decisions on your own.
Yeah, well, you spent decades on get wealthy behaviors. It's new to you to stay wealthy behaviors. What does that mean? How do I adjust? How to protect? We're going to help you cover that when you reach out on those sections. I also like to focus on tax planning because this is the decade where you're likely, if you're no longer working and your earned income goes down, maybe you're doing some Roth conversions. You're preparing for, how do I maximize the tax code to turn some of those tax deferred assets into tax-free assets so I don't have to make the required minimum distributions. A lot of cool stuff that happens with tax planning.
Yeah, and even inside of the 50s, there are some really significant milestones. You'll hit age 50 and be eligible for catch-up contributions. Age 55, if you have access to a 401k at an employer working, you can then pull that money out. And at 59 and a half, you can get access to all of your qualified money without having to pay a penalty. So there's some significant dates that are going to take place that will likely have an impact on your tax situation in this decade.
And then the last thing on estate planning. We spent so many, when we were looking at the younger decades, it was to make sure you knew what to do with the kids. If you couldn't speak for yourself, well, the kids are potentially out of the house now, so that's not as big of a deal. But it is one of those things where you're getting older and maybe you're starting to have some health struggles, or you have a significant other who isn't as involved in the finances, and you're like, well, wait a minute, what if I even have some cognitive decline or something like that? How do I get my loved ones who I trust to kind of have access to my assets? This is where you probably want to work with an attorney to talk about revocable trust, or you want to talk about, how do I structure this thing from an asset titling standpoint? Because what you don't want to do is, we see this all the time with adult children dealing with their aging parents, is all of a sudden somebody gets a cancer diagnosis or something like that, and they're trying to gift assets, they're trying to do all kind of weird things. No, be careful making those rash decisions. I'd much rather you focus on, how do I structure my estate to reflect my wishes, my desires, but also respect the laws so I don't step into a hornet's nest of mistakes just because I didn't know what I was doing?